to my morning report charts proposals on Friday the 27th of October with me, Richard Perry, market analyst at Hantec Markets. We've got a big move in these markets in the last 24 hours. We've had the ECB monetary policy decision and the euro has been sold off significantly on the back of that. Let's show you this markets board quickly. 1660 was a massive support on euro dollar. That got broken yesterday and it remains broken today. Big key move to the downside has driven the US trade weighted dollar index breaking out. There's a big head and shoulders reversal. That's a key technical analysis pattern, big base pattern over the past 3 months. And certainly suggests that there's going to be a continued recovery. This is coming as the Treasury yields have continued to pull higher, the 10-year into the mid-240s, and the 2-year just ever more further higher. And let me show you this chart, which I've been talking about previously, but has decisively moved to the downside as bond yields fell away yesterday, although at the same time as Treasury yields holding up and pushing higher sharply to the downside. There is a big positive correlation between the spread between bonds and Treasuries and the euro-dollar chart, subsequently euro-dollar pulling lower. So that big move on the dollar is impacting across these forex majors today. Sterling is also down as further Brexit pressure is coming on Theresa May. Suggestions that Nicola Sturgeon, the First Minister of the Scottish Parliament, is pushing for Theresa May to make some sort of formal announcement on the transition period, I should say. And that has the potential to sort of reopen divisions within the ruling Conservative Party. So subsequently, sterling is lower on the back of that. But what we are seeing is also equity markets strong. Big breakout on the DAX yesterday, and that's continued today. CAC also, FTSE 100 up above 7,500 again. Interesting that we saw the Wall Street markets pulling high yesterday, but falling away into the close. So what does that do to equity market sentiment in the States? Because there is a sort of a growing suggestion that momentum is sort of running out of steam a little bit to a certain extent in this bull run of the US markets. But certainly the dollar strength is a big factor today. Now, we have got the US advanced GDP today for the Q3, expected to be 2.5%. Now that it would be slightly lower than the 3% that we saw for the final reading of Q2 GDP. And that is 130 today. That will be a key driver later this afternoon of the dollar, I would imagine. And also we're going to see the final reading of Michigan sentiment, 100.9, which is slightly down from the 101.1, I think it was, as the flash reading. So, markets are looking interesting today. Now, my chart today is the Kiwi dollar. Now, this is another really interesting chart because it's at a massive key support, 68.15. That has been the key support from May, and that dates all the way back to May 2016, if that gets broken. Now, we've had 68.16 as the low today. But look at this acceleration now that we've had in the past week, ever since the announcement that the Labour Party were taking control of the New Zealand government. We've had a big sell-off, and that continues. And as I said, big sell-off, big strong bear momentum, big move to the downside. Is it going to break that support, 68.15? It's tested it once today. Lower highs, lower lows. Momentum indicators just unwinding, really. Back to sort of 50 to 60, I think that's a selling opportunity. Unwinding on the MACD lines. I think that you've got to continue to back this to the downside and see a real test of 68.15. If that gets broken, you're looking at the 66.75 level, which was that May 2016 low. So this is a big move, but look at the importance of this move as well. This is a massive support. That would be a massive breakdown and a change of sentiment. Really big change of sentiment on this. Big breakdown, big range break effectively, but certainly sort of breaking the sequence of lower lows. higher lows. Sorry, breaking the sequence of higher lows in this Kiwi dollar chart. So a big support 68.15 in there would be a test seen today, I think. So the momentum indicators still strongly negatively configured on the MACD lines and stochastics and RSI. A little bit stretched, you can argue, but I think this is just reflective of the strength of momentum to the downside. So with that in mind, I wish you good luck in your trading today, and I'll speak to you later. Thank you.